Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of currency pairs. My name is Vic. Thanks for joining me here. I know that we have not been actually covering Forex pairs for some time because I didn't get much time to cover all these markets. I usually analyze near about 11 or 12 markets for you every week for free. And sometimes I do not get enough time, or sometimes I do not feel motivated to prepare more videos for for the release in that week. So apologies for that, but here we are. We are looking at currency pairs again, and make sure you keep me motivated by hitting the like button and putting a comment below the videos. That always motivates me, and at the same time it also helps this channel. If you support this channel, then it is going to reach out to many more traders, and we will get better responses, and that will also motivate me to further create better content and better analysis for you every week. So yeah, make sure you hit the like button and put in a comment if you enjoyed this video, if you find it useful, even 1%, if you learn something 1%, or even you find a trade idea, if it helps with your analysis, make sure you hit the like button. That's the least you can do to support this channel. Thank you very much. Right, so let's look at currency pairs. USD-CHF, right? So why we are starting with USD-CHF is because that's the one which is kind of changing the market right now. You see, the market has been getting a little bit changed because of strength in DXY. DXY has been moving up. By the way, if you haven't actually seen the analysis on DXY, go and check it out, because that's very, very important. Even if you do not trade DXY, you must look at DXY analysis, because it affects all the markets. So just to revise, what we had here is that we had inverse head and shoulders on DXY, and then market has actually broken the trend neckline. Now it has come back to test this trend line, neckline. If this neckline is maintained, if it is not broken again to the downside, then we are looking for upward move, and that means the dollar is going to get stronger. And dollar is combination of several currency pairs, and one of them is USD-CHF. Now USD-CHF, if you remember, this is the zone that I gave you a few weeks ago, and since then market has been moving up. Now this arrow, do not worry about this arrow. I was just showing the point that it can actually reach it can start to move up. The main thing is that the market came to that FCP zone and started to move up, and it also gave exactly the same inverse head and shoulders that we had, and the neckline has been broken. This actually happened much before Euro USD or other currency pairs, right? So that means this is actually getting stronger, and that is giving the strength to DXY. And if dollar is getting stronger, then all other markets which are calculated in terms of dollar, they can get affected. So right now what's happening, market is obviously coming back, and that's happening because the market has created the W pattern here. This is the W pattern, and it will take a little bit of breather anyway, because it has actually started to go up. Overall the trend is still bearish. If you see, USD-CHF is still bearish, right? So what we have is a corrective move right now, and if this corrective moves was there will be smaller corrective moves on this corrective moves. So there will be corrections on the corrections. So this is a correction which is happening right now. The main thing is that it must not go beyond this zone, because if it goes beyond this zone, then this will not be a corrective structure. This will become an impulsive structure, and that means the market can come back down into this zone, the lower zone that we have. So this analysis is still intact here. So what we have right now, if we just measure using Fibonacci, so if I just I need to use a different Fibonacci, give me just 1 sec. Okay, so if I draw Fibonacci on this, what we can see that market has come to 38.2, which is around here, and that was broken here, and now market is expected to move higher. It's right now reacting to previous structure level, which is around here. It is reacting to that along with 61.8 Fibonacci level, and that's why it is falling down. Okay, if the market starts to go up, then we are looking for it to go to this FCP zone that we have got. Okay, so this is the FCP zone that we have, and if the market starts to fall, then what we're looking for is, if I draw Fib on this, then near about this level this FCB zone is also possible. So that's another one. Okay, but and that FCB zone is kind of like, neckline of this inverse head and shoulders, so it can come back down and then start to move up back into this upper FCB zone, and that's quite a possibility. So if that is going to happen, then that is also going to be reflected in DXY. Okay, let's look at Euro USD now. On Euro USD, we were expecting market to come down to this level, and if you have been in our group, in our Telegram group, then you know what you are looking at. And I also posted a midweek analysis on Euro USD, which worked out perfectly fine. So now what we need to do is just revise this a little bit. What I'm going to do is actually show you what market is trying to do. You see, pretty much like what we have on Euro USD, sorry, not Euro USD, but on USDCHF, we have a head and shoulders pattern here, and right now this is the neckline, approximate neckline, and the market has broken through that, but it never retested that, so it is coming back to retest it. There is another thing which is very important to note, is that we have this round number available to us, and that is a very important round number of 1.2. Right, that's the round number that we have got. So the market has come down to retest it, and almost immediately started to reverse. Now a lot of traders will think that this is happening because of 1.2, or a lot of traders will think that this is happening because of because it's going to retest this neckline. All of them are true. You see, we always trade our beliefs, right? Either you're trading Fibonacci, or either you're trading moving averages, or what. Stick to what works for you and what works best in the market. Come and go and learn that which works best in the market and which you are comfortable with. So both of these reasons are valid. Market has come through 1.2, and now it is reversing from there, and now it is probably going to retest this neckline. If this neckline is broken, then we are looking at a W pattern, which is going to bring us back into somewhere around here, and that is going to happen only if DXY falls down. Remember the analysis that we have performed on DXY, go and check it out. So if DXY starts to fall down, then it can come back there. So let's measure this. What we have here is something like this. So this is going to be my FCP zone around here. Okay, I know this is a little bit wider FCP zone because we always look at the higher time frame first, and then you can go down to lower time frame to see if there are other FCP zones in the middle of them. Let me just quickly mark this as FCP zone. Okay, so what we are expecting if the market comes in here, then we can expect back into that 1.2 level. That is a possibility. However, look at this candle. This is turning into an engulfing candle, which means that market may actually continue even higher. So if it starts to move higher, then where are we expected to go to? So we are expected to come to near about this level, and this forms an FCP zone here. Okay, and if the market keeps on going higher, then we are looking at these levels here. Okay, I'm not expecting euro to go and create a new high after this. This is done for now, at least for a couple of months. At least this is done, unless something drastic changes in the market. It is not expected to go way higher, because it has to go through a lot of barriers here. This one, and this pattern which has been developing. Now another reason why the market has been going up from that level is not just because of 1.2's level. You see, according to my research and according to my studies, everything kind of works in the market according to Fibonacci. So this is 50% Fibonacci level. The market is expected to go up from here because it is also confluencing with previous structure level here. So you see the market came down to retest this level, which is 50% Fibonacci, and then you have 1.20 previous structure level, and if you draw Fibonacci from this point, this is right at 61.8. so this gives us a very good zone around here. And if I draw Fibonacci from here, no, sorry, this is the valid one. Yeah, so that's the one. So because the market came here, that's why it is moving upwards. Now let me bring in water cluster algo as well. So the market is standing right there, and if I just remove these drawings, it is expected to go to some of these levels which are indicated by this. So I'm going to put those lines in here. Then we have this level, and this is a very important level that we have got at 1.9033. Okay, so let me quickly close this off. So these are the levels that you're looking at on EURUSD. So if the market comes into this FCP zone, I'm looking for a short opportunity. I'll wait for a confirmation, maybe using water or something like that, and then I'll go short on this. Right now this is looking bullish, so I'll have to be a little careful around here. If the market closes above this zone and I've got a confirmation, good confirmation, then I will go and take the long trade. So that's how I'm going to trade EURUSD. Okay, let's look at EURUSD using water envisage. Okay, so we had this short target which is started from here. This was the signal and this was the target, and the market has reached that target perfectly fine. And now if I go to the 4-hour time frame, the market gave us a very good signal around there. The color was changed from red to green, and then color changed from red to blue, and we had a very good signal. And right now it is reaching its profit target, and the water curve can also act as support. We know that. So at this moment in time, as soon as it touches the water curve, I'm expecting some sort of bearish movement downwards. You can see the market is already bearish right now, so I'm going to, if there is any bearish signal on water curve, then I will try to take that. But for that we have conditions that the color needs to change, and we should get a signal around here. If you go to the 1-hour time frame, actually even before that, no, sorry, that's fine. So if I go to the 1-hour time frame, what we have here is that we had this signal around here which actually went up. Now this is a kind of fake breakout. Now this fake breakout happens sometimes in the market when market makers are trying to manipulate the prices. And what happens here is that if you are placing your stop loss at the right level, then you should not be worried about this, because stop losses are part of the game, right? If you cannot trade without stop losses, so the best thing is to follow the stop loss, and the stop loss guidance is given by this blue dot here, and white dots are profit target. So this is the signal. The market changed the color from red to green, and then market started to move up, and this is the signal, this is the target that it has reached. Always try to follow what higher time frame is telling you. So how could I have applied this? If I go to the daily time frame, I know the market has reached its profit target, so I'm expecting some reaction upwards, because it has now reached a kind of these targets can act as support and resistance as well. So I'm expecting move upwards. So that's one thing. I also have done the analysis that 1.20 level is there, Fibonacci level, and other stuff is also there, which we just saw. So I'm expecting a move upwards. So I'm going to look for a long position instead of short positions, because the market is telling me like that. On H4 time frame, it is showing me that market is expected to go up, so I'm going to favor that. And if I go to the 1-hour time frame, instead of taking this short trade, I'll be taking long trade here. I'll be taking this long signal here and placing my stop loss here, which was not hit. The market gave a fake out signal. I'm going to ignore it, because my analysis is telling me that market is expected to go up, and that's why this worked out fine. This also worked out perfectly fine. So this is what we have on EURUSD. Okay, if you enjoyed this analysis, make sure to hit the like button to support this channel, please. Now if I go to the AUDUSD, on AUDUSD, this analysis is still valid. Now what we need to do is simply just move it to the side and just extend this zone, because this zone is kind of acting as a resistance zone. So if the market actually gives a confirmation to go long, then I'll be looking to go long like this further up. However, if the market gives me a confirmation to go short from here, from this zone, because this is going to act as resistance. It used to be support, now this is going to act as resistance, then I'll be looking to short from this level. Okay, right now this is also showing similar sort of like things like the inverse saddle shoulders, but it is actually an M pattern, and that's why the market is moving up. And if that is the case, then we should be able to draw Fibonacci on it to measure it. So if I draw Fibonacci on it, it has come to 38.2 here, that's 16.8, and that is why we are looking for something like this. Okay, so that's what we have on here on AUDUSD. Let's look at GBPUSD. Now GBPUSD has been a busy currency pair. It has been up and down, up and down. So on daily time frame, it does not actually give you much because there is a lot of movement up and down, right? But that's the beauty of thing. If you know how to use FCP, WNM patterns, if you know how to do that, you can make a lot of money in such conditions. Most of the traders are breakout traders. They're looking for huge moves, but we are not. We are also looking at WNM patterns. So you see GBPUSD is full of WNM patterns, full of FCP patterns, and this has been gold mine for all the FCP patterns that we are that have joined the program or are there in the channel. Okay, in our students area, we have been discussing GBPUSD on various time frames and various opportunities. You see, we had this M pattern forming, and that's why this was FCP zone. The market could go up, and I also mentioned that the market is using what envisaged. We were able to take we could have taken several ups and downs, several shorts and longs here, and then few other students also joined up in analyzing all of that. This one also, this was done by one of the students here, one of the clients here, and the target was hit on his analysis. So this is a gold mine, because you can just trade these all WNM patterns, which are highly predictable if you know what you are trying to do with your Fibonacci settings and with what with the knowledge that you gain. So this is looking very good. So in terms of daily time frame, there is not much. So if you are trying to use it, if you are trying to trade the GBPUSD on daily time frame, it can actually burn you because there is a lot of up and down movement happening. So you should be ideally trading on 4-hour or even lower time frames, 1-hour time frame. On 1-hour time frames, one of our clients actually was able to take this trade. I know a lot of people will say that this is actually news which actually caused this, but he was able to take it. He was able to plan and take it before it happened. You see, the market was expected to come here, and this is what he posted. It's a high probability one, and then it started to move up almost exactly at the same place, and it reached the target, and it's a target hit. So most of the market movements are pre-planned, they can be predicted if you know how to trade with Fibonacci's. So in terms of the analysis, if I go and look at the monthly time frame, start with monthly time frame, what do we have? The market is still bullish. GBPUSD is bullish, and it will stay bullish. It will try to even reach a little bit higher. Right now what it is trying to do is, this is a W pattern, and this is one of the W patterns that we trade. So we have 61.8 around here, and the market reached 78.6, this particular Fibonacci level, and that's why it was showing reaction. Now it is trying to do what? It is trying to actually go through this, but has it gone through it yet? No. So it is expected to fall no matter how many retests it is trying to do, but it is expected to fall. Okay, I've got two FCP zones here. One is this one, other one is there, and these FCP zones are of high probability. So I'm going to favor my short positions on GBPUSD if I'm looking for any kind of swing trade. But as I said, on lower time frames, you can play all of these WNM patterns, which can give you both long and short opportunities. You see, this is an M pattern, that's why the market is going up, and this is a W pattern, that's why it is going down. Then we have an M pattern, that's why the market is going up, and this is a complex M pattern, that's why the market is going up. Now we have a W pattern, that's why it is expected to go down, and this is in the zone right now. So when the market will come here, I will look for a short opportunity again, but it depends on how in which time frame you are trading it. So right now this is what it is. I'm expecting I am expecting it to play like on lower time frames. I'm not going to look for any huge time frame like daily time frame to trade with, because there's a lot of noise around here. But if you are looking for something like that, then I'm expecting market to come down to this level or so. So that's the best possible scenario. If the market starts to go down, then we can look for something like this to happen on daily time frame. Okay, so that's GBPUSD. Let's look at USDCAD. Okay, on USDCAD, let me go to the daily time frame and reset this. USDCAD has been giving some strength to DXY, but it has been very complicated. So from FCP zone started to move up, then got stuck into these levels. So these levels are still valid, and the market can come back down into this FCP zone. If it does, then I'm looking for a buy. Right now what we have is that we have an M pattern forming. That means the market is expected to fall here if it goes through some of these levels. So let's look at what has been going on. I'm going to remove these arrows so as to avoid any confusion. Okay, right now what we have is that we have this M pattern forming. So where can it come to? Let's look at it. So if the market goes through this level, then it is expected to come down to this level of 1.2683, and even further than that it can come down to near about 1.26581 or so. So if the market starts to fall down, this is the plan that we have got. Okay, at each of these levels you can look for, like you can use these levels as support and resistance. So price can get supported, or if the support is broken, then you're looking for maybe extended move in the same direction of the market. So it's like that. Right now it is consolidating, and if you go to 1 hour time frame, you get a lot of WNM patterns which you can trade all day long. So many of them: M pattern, W pattern, M pattern, W pattern. So if you know how to trade these FCP patterns, you can just keep on playing them. You do not have to find any other opportunity. Just find one of these markets and just keep on playing them all day long. Okay, so on USDCAD, this is the plan. If the market starts to go up on the bullish side, then obviously this is going to be the next one, 27846, near about that level, and if that is broken, then we are looking for further move back into this. But this is going into kind of channel sort of thing, sideways channel. So this can also act as an intermediate level here. Okay, then which one is the next? So we have done AUDUSD, EURUSD, GBPUSD, USDCAD, USDCHF, right? Let's look at NZDUSD. NZDUSD also is giving us very good opportunities on lower time frame. On daily time frame, it is sideways. It is creating a structure like this. So if you're looking for a swing trade, then you are looking for a breakout from there, and you see market is creating this W pattern here, and at the same time it is also creating an M pattern. So whichever side it breaks through, we are going to attack this, and we can actually make money if you know how to trade this, right? Okay, so this concludes our analysis on Forex pairs for this week. I hope you enjoyed this, found this useful. If you did, hit the like button, support this channel, motivate us to come up with more of these analysis videos. Put in a comment at the bottom of this video on YouTube and let us know what you think about these analysis, and what is your opinion on various currency pairs. What do you think the market is going to do in the next week or so? Okay, and I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.